Welcome to Markets Now. I'm Michelle Rook along with Bill Biederman with agmarket.net. It was a down day across the board. Commodity-wide selling pressure today, Bill. And, the risk off in the outside markets, was that what pushed this or what was it?
I think the bulk of the sell-off was due to the outside markets with the strong dollar, the weaker Dow, and just a general risk-off mentality. And then think about the last couple of weeks. We've seen a huge build in soybean position by the funds. They've gone from 60,000 long to about 160. I'm sorry, 130,000 longs. So they had some lightening up to do. But Michelle, honestly, the sell-off didn't do any damage. It's still an uptrend in the short-term markets, and in the big weekly charts, we're really at about a 50% pullback of what we sold off from last summer's high to this fall's low.
And if South American weather, at least in Argentina, continues to stay hot and dry, we probably will get another pushback higher here. So this might have been kind of a healthy correction in beans.
I think it is. For the trader, this would be a good buying opportunity. You don't have to risk a whole lot. Last week's lows is right below the market, so that would be probably your risk point. If we take that out, that might change the direction a little bit. But right now, the stochastics and the trends and the moving averages are all pointing higher. Like you mentioned, the South American crop, Brazil's still on line to do a very large crop, right around 150,000 tons. 150 million tons. And then the Argentine crop, if that drops below 45, I think there is some concern. And we would have to start watching what demand does. But right now, they should be picking up most of the demand.
Yeah, and we're in record high territory here on the charts. And so that should attract the funds, shouldn't it?
Yeah, it would. And, if we get some sustained dryness in South America, we could push this market a lot higher. History tells us that the difference between a drought and no drought is either about a 10% potential up from here versus a 30% potential up from here. Well, 30% up from here takes you to up over $19. So, we got to watch. This weather is going to be critical.
So does corn have a lot of South American weather premium in it yet, or has it just been more following soybeans at this point?
I think that the corn has been torn between the competitively priced wheat market to the point where we saw some actual mill wheat fed to cattle here last month in the plains. So that's how cheap wheat got, and how cheap wheat was in Russia being offered on the world market. Although it may not have been Russian wheat, that's another debate. But the corn market's been held back by that, and so it is relatively low. And it has a springboard potential. Now we've had a nice, 20 some cent rally going into the end of the year, but we could go up over $7 if we see the wheat market find its feet, I think.
Yeah, that would help certainly, but we also got to get exports to pick back up here. We're still running about half of where we were last year at this time, aren't we?
We got a big battle to do on exports. Now, the good news is this is the time of year where corn exports typically pick up here in the next 2 months. But we're going to need to see some evidence of that, because it's going to take real evidence to convince these longs or the bulls to come back into this market. We have seen the funds maintain a pretty steady position of about 160,000. That's a good thing if we start seeing demand, and it's a really bad thing if we don't, because they may start to liquidate. So we'll have to watch that really close.
So do you think the wheat market's bottomed? We've had 3 higher weekly closes here, and I know today the dollar didn't help, and we had really pretty poor export inspections.
That's correct. Yeah. So the Kansas City wheat is my favorite. I like that one just because I think it's got the ratio it has to Chicago is fairly good right now. It's not cheap like it was, but it's okay. And I think we're at a point on the chart where we've had a nice little rally. So, we're at a place where a farmer could probably make some sales here and maybe lock in a little bit of profit. But we have to be really careful because, again, the situation, as we all know, is we've seen cold weather damage, we've seen drought damage, we've seen poor stands. So going into the spring, it's going to be really important that we start seeing tillers. And if we don't, then this could be a whole different ballgame on the wheat.
Absolutely. What about this cattle market? We had new contract highs last week, and we've got cash and cutout values very strong at this point. So today, again, was that just a little healthy profit taking before the next leg up, Bill?
We would really enjoy seeing this market pull back down a little bit. I know some farmers don't want to hear that, but it's at a great price now. So if you like the price, you might be able to hedge it off a little bit. But I think from a consumer standpoint, from a keep the product moving standpoint, and then as we move into the next quarter where we see even tighter supplies, a pullback right now would be a great opportunity for people. We think this market's moving higher. And it's a long term, it's a multi-year, it's a 3 to 4 year trend.
Yeah, we got caught up in the commodity-wide sell-off with the livestock today too, obviously, but the hog market is still looking for a cash bottom here, isn't it?
Yeah, the hog market is a little bit more difficult to even try to trade. Obviously, it's traded more technically than it is fundamentally, and so it's hard for me to even follow the hog market. I don't really watch it that closely, but it is definitely technically oriented, and hopefully we'll get a solid foundation under us.
All right, thanks so much. You aren't the only one that doesn't want to trade hogs, that's for sure, that chop fest over there. All right, thanks, Bill Biederman, joining us with agmarket.net. That's Markets Now.